Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's September 19th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. I used to play Texas Hold'em all the time. I think she was pretty good at one point. Won some tournaments. Finished at the final table. Too busy these days to play. In Texas Hold'em, there's a popular saying that when you sit down to play and you can't find out who the sucker is in the first 30 minutes, that means it's you. And I think I'm the sucker here. Or maybe the only one that doesn't get Florida. And guys, I talk about Florida a lot, and people say, "Whoa, those rants are funny," and they, tell you stories. Guys, this is the truth. This really happens. I'm not exaggerating. I'm not even saying it to be funny. It's more like therapy, because I cannot believe some of the things that happen here, and I want to get your thoughts on it too. And say, "Well, Frank, that's normal." But for me, it's just it is. It's like therapy to get some of the stuff out that just happens to me that never happened to me before. Living in New York for pretty close to 40 years, and now I've been here 8 years and 46, close to 40 years. But it's crazy. It's crazy. I mean, so the other day, and here's a story, comes a little bit of a rant. I drove up my truck to get an oil change. I also need the taillight fixed because it just stopped working, right? It wasn't cracked and it just stopped working. Electrical issue, whatever it was. And the truck's only a year old and, it just broke down. So I call a dealership where I bought the truck from, which is Chevrolet. And I never really go to dealerships for like oil change, tires, maintenance issues. You have to wait there all day, and just the employees are super nice, which kind of makes me sick. It's like, "Hey, sir, can you want some water?" Or "Thanks for seeing us, sir." It's just annoying because it's so fake. It's like, all right, just, kind of leave me alone a little bit. I don't know if that's bad to say, sorry. But anyway, I really don't go to dealerships. I'll just go to like the local mechanic and get things fixed unless something is under warranty, right? Then, that's why I want to go to dealership. And my taillight was covered because, it was an electrical issue. And I said, okay, let me go to dealership. And this was on Wednesday. So I call them and they tell me, okay, we have an opening at 1:30 on Friday. So I drop my car off on Friday. The guy tells me, hey, this could take a while. You want someone to pick you up. And I'm like, it's a broken taillight and an oil change. Isn't it like 30 minutes tops? 45 minutes. I have my phone. I got work to do, whatever. I don't mind waiting. Plus, I made an appointment with you for 1:30, right? So you had an opening. I thought that's kind of normal. It's not like I just drove the truck in off the street and said, hey, man, fix this thing now. No, it wasn't like that. So he's like, sorry, we're a little backed up. And I'm like, okay, fine. So I call my wife to come pick me up. The dealership's about 5 miles away from my house. And now she's on her way. And I'm talking to the guy. And the guy tells me, hey, you know what? When your car is ready, we'll call you. What's your phone number? I give my phone number. I said, if you can't get in touch with me, here's my wife's phone number. But, here you go. And he's like, okay, no problem. I'll call you in a little while. So that was at 1:30. Now it's like 4:30. And I said, they didn't call yet. So let me look at their website. Look at their website. It says we close at 7 p.m., which is kind of late for Florida, which I was surprised. 7 p.m. I was like, okay, so you know what? I'll work till 6 o'clock. Figure my wife come pick me up with the kids at work. We'll drive to the Chevrolet dealer together, pick up the car just before 7, go out to a nice dinner with the family. Really, really cool. Nice Friday night. This is where things get a little crazy. I call him up at 6:15, and someone from Chevrolet answers. I'm like, hey, you know what? I dropped off my car at 1:30. Is it ready yet? Because, nobody called me. I like to pick it up. He's like, the repair shop's closed. And I'm like, well, you're on the phone with me. It sounds like you're open. He's, what are you talking about? He's like, well, this is the sales department. The repair shop closed at 6 p.m. I'm like, your website that I just looked at says your place closes at 7, not just sales, the place. He's like, sorry, sales open at 7, repair shop closes at 6. Now, I may be getting old. And maybe it's just that so many people that I hired over the past, 7, 8 years that I've been in Florida have done a piss poor job for me. But I have zero patience when it comes to stuff like this now. Zero patience. It's not me being nice and trying to figure out. I'm very direct because I'm like pissed off right off the bat. Again, maybe it's because I'm getting older and that happens to, especially men, stubborn. But you just get pissed off a lot quicker. So for me, I just speak my mind. So I tell the guy, listen, Pat, you're joking right now, right? I mean, you took my car, you worked on it. You said you were going to call me. Now you didn't call me. Your repair shop's closed. So, what do I do? He says, well, you know what? You can pick up the car tomorrow. It wasn't even the fact that picking up the car tomorrow, right? I mean, we'll get to that in a second. But the way he said it, like that was perfectly freaking, I'm going to be nice, normal. That I don't have a car on Friday night because you couldn't change my oil and repair my taillight in 5 hours, 4.5 hours. And you didn't call me to let me know that you couldn't get to it or if I need my car or if it's done. You didn't call me at all. Like the way he said it was perfectly normal. Hey, just pick it up tomorrow. And now the best part, because it gets even better. I'm like, you guys are a disgrace. I'm a customer. I bought my car there last year. I'm never buying anything from you guys again. I'm really ticked off. He's like, well, this is sales, not repair. What do we do wrong? He's like, almost like we could still be friends. And he's trying to offer me. He's like, and next time you come in, I'll take care of you. I'll give you a great deal on a car. For me, I'm like, you're in the same building. You're under the same roof. That's like one of my customers calling me at Curzio Research and telling me, hey, you know what, Frank, money flow trade is terrible. I hate Mike Alkin. He's terrible. He's horrible. I lost money. And I tell the guy, hey, that's Mike Alkin. That's not me. That's Money Flow Trader. He's editor Money Flow Trader, which is under Curzio Research brand. I'm like, hey, that's Mike. But hey, if you want, I'm doing fine. I'll give you a discount on my Curzio venture opportunities. Imagine I said that to you, like someone that was really pissed off, like a customer. And I said that. Hey, that's not my fault. Deal with Mike. Are you kidding me? He's like, that's the repair shop. That's not us. And he starts going on like, our sales department's great. We always have good deals. I just hung up on him. And I hung up on him, which was very smart for me because I would have said things I probably will be regretting right now. Probably not. But anyway, I've learned to be smart and just back away when I need to back away. So now it's Friday night and I have no car, which I needed, that night. Gets better. So I tell my wife to drive me to the dealership because they might have fixed the car and it's outside. Maybe it's not in their shop and, I have a spare key. So we drove there and my truck happens to be in a lot. So I decide, I'm like, I just take it. I don't care. I don't ask. Security guards, they're in the parking lot. Again, this is Florida. And even if I knocked on the window and said, hey, buddy, I'm stealing this car right now, they'll probably be like, yeah, all right, no problem. Again, it's Florida. Something like that is kind of normal here. So the next day, the dealership calls me. And by the way, that night I left a message Friday night telling them I took the car because I don't want them to call it in stolen. I think it was stolen. So the manager calls me. Now, if you're the manager and you have a customer that's pissed off, and someone just took their car, right? They just took that car after you fixed it, and I didn't even pay yet, right? This is the whole story and everything. Wouldn't you find out the entire situation first before calling the customer? This way you could answer any question they have and be as helpful as possible to the customer, especially if they're a good customer. I mean, I just bought my car there last year, right? And I'm really ticked off. So the manager gets on the phone with me and he's like, hey, I'm so sorry. What's the problem here? And I go over the whole situation. I dropped off the car. Supposed to call me when it was ready. You didn't, blah, 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 blah. I had to go there, pick it up. Anyway, with the spare key. So I tell him, I went there, I picked up a spare key. I have the car. So he goes, you know what? Let me check your car real quick. I said, I have my car. He's like, but let me check the car since it's in the shop. I'm like, I have my car. And then he just puts me on hold for like 10 minutes. Not even like, hey, I'm going to put you on. He just puts me on hold. So I hang up like, after 10 minutes, I'm like, I'm done. He doesn't get back to me, right? The guy winds up calling me 2 hours later. And you know what he asked me? He asked me, he's like, let me ask you a question. Do you have your car right now? I'm like, yes, I just told you I have my car. He's like, oh, I'm sorry. We were supposed to call you, and this is his conversation, but it's $52. So when you want to come by and pay, just let me know. That's it. That was a conversation. I guess his solution is not to address anything they did wrong and for me to go to the shop a third time because they forgot to call me to basically pay the bill. So for some reason, they wouldn't take my credit card over the phone. And now this was Friday. I still haven't gone there yet. And they've called me a dozen times. It's like I owe them $10,000 or something, which I don't. It's not the money. I'm just so ticked off. It's funny. Sort of like Comcast. Like if you call for service, it takes you 15 minutes to get through the automation and to talk to someone that knows what they're doing. But if you owe them like $10, they'll call you like 8, 9 times a day. I mean, why don't you transfer the guys that are calling me 4, 5, 10 times a day into your customer service department? They seem to have plenty of time. Why wouldn't you do that? It's kind of amazing the way businesses work, right? And I'm going to eventually pay them. Guess when I'm in the neighborhood again, I have nothing to do. But how do you take someone's car? Tell me you're going to call me when it's ready, which was said to any one of you dozens of times when I dropped my car's repair shop over the past 25 years. Hey, we'll call you when it's ready. You forget to call me, you keep my car overnight, and then act like that is perfectly normal. Like that's normal. Oh, just pick it up tomorrow. You'll be fine. Like I said, maybe I'm the sucker that doesn't get it. And everyone else does. I say this all the time, still trying to figure it out down here. And again, it may be me. I have no clue. But thank you for listening to that because I love it because it's therapy. And now let's get to the real fun stuff because I have a great, great interview today with someone who I love. That's in my rotation now. By that, I mean I like having some guests on every quarter to update the market, stocks, economy, who are also fan favorites of yours based on your emails that I get, which, you send me to frankcurzioresearch.com. And that person is Kim Iskyan. Now, Kim's one of the few analysts I listen to when it comes to international markets. I mean, you're looking at a guy that spent past 25 years visiting, exploring, analyzing global markets, been a stock analyst, research director for big emerging market investment banks, managed a hedge fund, sold mutual funds to private bankers, advised Fortune 50 companies on political risk, helped build stock exchanges from scratch in countries that few people can find a map on. I mean, he is the international guy that I like and I listen to because I always learn something. He's got to visit over 90 countries. He does boots on the ground research, talks to locals, go to local pubs. He's the best place to find information, have awesome conversations. He also edited International Capitalist, which is a newsletter he writes at Stansbury Church House, where Kim is also the publisher. Now, I'm bringing Kim back because I want to get his take on tariffs. You know what my take is, and I've mentioned it numerous times, about how you don't have to worry about it. I said that since February. It's not going to impact our markets. Tax reforms are easily going to cover any kind of tiny tariffs. And again, 200 billion, 250 billion here and there might seem like a lot. It's really not a lot in the scheme of things. And our market has done fine, even though there's 300 million stories have been written since then, and they try to scare the hell out of you about a trade war coming. But I wanted to get advice from Kim because it's taken basically to a new level. Because now we're seeing the Chinese market's crashing down 25%, and the president's like, I don't really care. I'm just going to keep seeing this out, and I'm going to be stubborn. And you're thinking like some of these stocks are trading at 5-6 times earnings, growing, still reporting good numbers despite everything going on. Again, the numbers are very small. You'll see in a minute when I interview Kim. But I wanted to get his opinion on when to actually buy some of these stocks, how big of a deal this actually is. Will this continue? What's going to happen to the U.S. markets? Because he's the guy that you want to talk to about this. And it's not always about me, in my opinion. I like to get the opinion of other people. I'm not stubborn where I'm like, this is what I said and this is the way it is. I want to talk to people involved in the situation, people who visit this country, people who have contacts there. And Kim's going to give you a scoop on tariffs that you're not going to get anyplace else. Okay, forget about everything you read, CNN, Fox, wherever, all over CNBC. Kim's a boots on the ground, talks to the people there, and he's going to have some amazing information to talk to you about tariffs. It's going to blow your mind away, and also some amazing stock ideas. We're also going to talk about one of the countries he loves best that he just came back and visited, which is a surprise, well off the map. And he's also going to share one country that he would tell you should not even go there to visit because you'll probably get robbed at gunpoint. So Kim's a great guest. He travels all over the world, always has stock ideas. It's a fantastic interview. I'm going to get to in a minute. Then at that, my educational segment, I'm going to share with you the one thing China could really do to us that would crush our economy. And the fact that they didn't do this yet kind of surprises me. With everything escalating and the stubbornness, you have the president of China meeting with Russia and Japan, two countries they really don't like, to kind of maybe find out deals and figure out deals against the U.S. or whatever it is. This could continue even longer. If it does, China has one thing that they could do that'll crush us. That will absolutely crush us. And we're this huge, picture us as Superman. They have the kryptonite. If they do this, then you know trade wars of fear. I'm going to tell you exactly what that is, what sector it involves, is completely beaten up, and why the last time China did this, the stocks within this sector, and they're not many, did not go up 100, 200, 300%. They went up thousands of percent. And right now, it offers you a really favorable risk reward. I'll cover that sector and maybe highlight a few stocks you could buy right after I get to my interview with Kim Iskyan. And here it is right now. Kim Iskyan, thanks so much for coming back on the podcast from Singapore, which I love.
Frank, how are you? Thanks for having me.
Thank you. Thank you so much for coming on. Kim, I always describe you as one of the few analysts I listen to when it comes to international investing because of your track record. You've been doing it for 25 years. And I mean, when I read your stuff, I'm always learning something, right? Because you're always in the field. You're traveling to these countries, which you're going to get to, which one of the recent ones that you travel to, which you're excited about. But I wanted to start out with China. I mean, I get a lot of questions on it. For me, my stance was in February, listen, ignore this because any of the consequences you're going to see from tariffs is going to be pretty much muted by tax reforms. If you look at, across the board and it was good advice, but it doesn't mean there's not trading opportunities because China's still fighting back and forth. But I didn't expect China to really last this long and continue to, I don't know if it's stubborn. I want to put politics aside, whether you agree with it, whether you're not, but it's obviously crushing their economy and their stock market. And the U.S. is doing fine. So you would think they would come to the table and find some sort of agreement by now, but they're not. And I wanted to get your take on it for someone who's in the field, knows this market better than anybody. What are your thoughts on tariffs that people aren't really talking about that's kind of interesting to you?
Well, I think it's an interesting point. You have a divergence between what you see in the economy, in the Chinese economy, and what you see in markets. And the macro figures out of China they're still looking all right. The growth is fine, and exports actually have gone up because you have a funny thing. People know that these tariffs are going to be imposed, so they're front running. They're buying more stuff now in anticipation of those tariffs going up. And I don't know, when you look at the absolute figures, there is not, China imports $187 billion worth of stuff from the US every year, and it exports $530 billion worth of stuff to the US. And it's a relatively small portion of the economy. And even if tariffs, I've seen some estimates, if tariffs go way up and this is like a big hairy deal, the actual impact to economic growth in China is, it's not going to be enormous. I think what hurts from a market perspective is just that it's terrible for sentiment, obviously, and people are anticipating that it gets worse. And it might just affect things at the margins now, but yes, it could get a whole lot worse, in which case, you're right, China has a lot more to lose because it relies on trade with the US more than the other way around. I think that we'll really have to wait until the first quarter of next year before we see the economic impact on China, because again, you have the kind of front-running stuff going on. And a 10% boost in tariffs, is that really going to change that much in China? And what really, before real damage is done, there has to be structural change to supply chains, right? Because at some point, some manufacturers in China say, okay, this is killing us. We're going to pick up and we're going to move to Vietnam. We're going to move our facilities to Thailand. We're going to move our facilities to Bangladesh. And then that really starts to hurt the Chinese economy. So I don't know. I think it hasn't really gotten there, and the politics of it. I think that Xi Jinping, nobody likes to lose face. Nobody likes to say, all right, I'll give this to you. And Donald Trump certainly doesn't like to do that. I don't think anybody does. But I think that in this part of the world, that's even more difficult. And even though Xi Jinping does control the media in China, and even though it is in effect a dictatorship, he doesn't want to look like he's giving in to Donald Trump and the Americans. So I think you're right. I think eventually he will, but it'll be a very carefully managed sort of thing. And you can bet that people in China will not interpret it as China giving in.
Yeah, and you said a lot of interesting things there. I mean, one of them is that when you look at the numbers, it's not going to crush economic growth, right? Because we see numbers like 200 billion, and we're in 24-hour news services here in America, which you know about, that even the smallest story has to be exaggerated times 10 because they got to fill up the whole day with news, right? So, when you see these figures and you look at them, and because there's things that China could do, there's things the U.S. to do to make this more serious, and it's almost kind of like a game of chess here, and you're right. China can't come out and say, okay, you know what, the U.S. is right, and say they have to save face. So I could see that going behind closed doors has got to be things that each of them want that they could say behind closed doors and say, okay, and then we're going to come out, we're going to deny we did all this, but we'll come out and say, okay, we reached an agreement together and we'll work together, whatever. When that happens, and I'm saying when because I should say if, not if, but when it happens, right? Because it's going to have to happen because we're seeing that the Chinese market, like you said, sentiment-wise, come down a lot. Is it a good opportunity to buy these stocks after that announcement? Because I was thinking maybe it might be a good opportunity before, because I know that you've invested in China and you have stock pick recommendations that you like in China. But when would be the good time to buy them? Should we just wait until this announcement is finished? Because I thought it would happen a month or two ago. And if you bought stocks like JD, which I have in my portfolio, it continued to come down like Alibaba and Tencent and a lot of other Chinese related stocks.
I think that's you're never gonna. Well, it's pretty much impossible unless you're incredibly brilliant and or lucky to pick the bottom. I think that it's a good idea to just once prices get, if you're looking at some stocks with a PE of 5 or 6, they're yielding 5 or 6%, and the top line is growing in the double digits. At a certain point, you say, you know what, it might get another 10, 15% cheaper, but the underlying business is so strong. And if I guess what I'm saying is that you want to accumulate along the way, and you don't want to catch a falling knife, but you also don't want to wait too long. And I think at a certain point, things are so cheap that if you wait too long, then you've missed the boat, and markets do anticipate. So once it does look like these things are going to clear, I think things will rally pretty sharply. I think the time is now.
And for U.S. investors who are looking at this situation, and you look at China, and China, performed well for a while, and since February it's been down a lot. I mean, is it just the stocks that you would focus on, like the normal ones? I mean, would you buy the FXI, which is, I think it's the 25 largest stocks in China? I mean, what are the best ways to play? Do you like individual names, or is it kind of like, hey, you know what, just buy everything related to China and, whatever, have a stop on it. And, once this is resolved, prices will go a lot higher. Stocks are cheap and growth and stuff like that. But how would you actually play? Is it individual stocks, ETFs, or?
I think I would. Well, I look at China quite a bit, so I think buying an ETF is it's not the most efficient or effective way of doing it. There are a couple of stocks that I like in particular. I think if you find some that have been beaten down, in which it doesn't really make sense, and the problem with buying the ETF, it's the usual problem. What if there's some stocks in there that aren't going to do as well? There are others that are going to underperform. I think that I would put a lot more faith in my stock picking and really look at some stocks that are going to do better instead of buying just the index. I can tell you about one of them that I'm liking in particular. It's an indirect play on the boom in the middle class and on e-commerce. And I don't know if you remember, but there's a thing called Singles Day in China in early November, and it's kind of like to celebrate singlehood, and and people go on a total online buying frenzy. And on November 11th last year, in a 24-hour period, they bought $25 billion worth of stuff online, and that is, just to put in context, that's four times bigger than Cyber Monday in the U.S. So, and this is all it's an Alibaba sort of thing. And Alibaba really pushes it. So $25 billion worth of stuff. Now, the question is that how do you get all that stuff to everybody, to all the people who buy it? Well, there were 812 million. Just imagine 812 million. That's like, what, 2.5 for every man, woman, and child in the United States. But 812 million separate packages that had to be sent, or orders that were placed. And that required 160,000 tons of packaging material. And that's, like the corrugated cardboard, the cardboard boxes, the paper that you wrap around stuff. And that was enough to fit in 8,000 semis. So if you think of 8,000 semis stuffed with paper, and that was just on that one day for that $25 billion worth of stuff. It's just, the numbers are kind of mind-boggling. So what we did, we looked at the company that produces this paper and this corrugated cardboard and all that kind of thing. And it's a company called Nine Dragons Paper Holdings. And they've been around for about 30 years. They have a 13% market share in this weird little niche, which makes them the biggest player by far. They have the highest margins of any other firms that produce this paper, and demand for this for packaging material is just going through the roof because if you look at e-commerce in China is far larger than it is in the US, and it's still growing at somewhere between 20 and 30% a year. So, as you know, anytime you buy something online, you get in a box that's wrapped, and there's more wrapping inside. So this is they're seeing huge demand growth. So Nine Dragons is it has the highest margins in the industry, partly because a lot of the smaller players are getting shut down by the government because they pollute too much. So the Chinese government is going and saying, okay, either you have to reduce the amount of pollutants you spit out, or you're gonna have to close down. So Nine Dragons is in a fantastic position to gobble up some of these smaller players. Now, the share price is down by about a third since March, and that's partly because, well, the Chinese market overall is down by about 23%. And it's also because a lot of people were concerned because Nine Dragons gets about a third of its input, that it's paper, from outside of China, but it's 2/3 sourced inside of China. Now, part of that is they've recently bought some paper plants in the US. They have some operations in Vietnam, but they are pretty well covered. And this is not, when you look at the numbers, it's not a huge concern, even if the price of some of that paper goes up. And this stock, well, it's a $5 billion company, and it trades at a PE of around 6. And this was a great coincidence. But just yesterday, they announced their results, and they were extremely strong. The shares were up 7-8% intraday. They finished up about 5%, and they boosted their dividend. So now it's about 6% annualized. So obviously, it's a company that's not concerned about its prospects if they're boosting their dividend. So it's it's one of those weird situations where you say, okay, is there something that I'm not quite getting here? Because it's down a lot. It's growing fast. It's cheap, and it even has an ADR. It's not a hugely liquid ADR, but it's NDGPY, or else on Hong Kong, it's the ticker is 2689. So yeah, that's one of the stories I like a lot, that I think makes a lot of sense in a lot of ways.
Yeah, it's amazing, right? When you see, and we saw that kind of in our markets as well, right? During the credit crisis, where I think it was the S&P 500, 18% of the companies are trading under $10 a share, right? So you see these massive disconnects sometimes, and you look at a company, like you said, just came out showing growth numbers. Things are great right now. And because of the overall economy and the market and sentiment, right, it's coming down, which presented opportunity. Doesn't mean it can't go lower. But if that problem is solved, this thing should really recoup a ton of those gains, which, I think will eventually be resolved. And the last question on China here, which I'm curious, which maybe you could answer, because for people who don't visit there or go there a lot, right, they say, okay, China, communist country. What is the sentiment there among people? Because it might not matter, right? Because it's a communist country, but you have the president fighting with the U.S., right? And, they control the media, whatever it is, but they also see that the stock market is really coming down. They're seeing sentiment change. Does that reflect in the decision he would make to maybe have to resolve the situation quicker? Or, say if he's completely stubborn, right? And the government's like, I don't care. We're never going to do this. The market could really come down a lot more. But when does it come to the point where maybe the people that he's hired are really talking to him? Are you seeing any of that from someone who's pretty close to the situation, where they're saying, okay, why don't we figure this out? Because it's really starting to hurt us now. Or is it, hey, one guy, it's a communist country, he's stubborn about something? I'm just curious to see what the sentiment is, and maybe that would reflect it in getting this resolved quicker.
In Beijing in July, and I had a bunch of meetings with some brokerages, a bunch of media companies, and I can tell you that the number of times that this came up, the whole trade war thing, was exactly 0, which is neither here nor there.
It's funny.
But it was not exactly something that was on everybody's lips. I think in terms of the politics, there's one of my favorite books about politics. It's called The Dictator's Handbook. And the subhead is why bad behavior is almost always good politics. And it was written by a couple of political scientists. And the message of that book is that politicians, their only and main objective is to stay in power. And it's kind of obvious, but that guides a lot of what they do. And that determines who they hire, it determines who they fire. It determines everything from, if you look at some countries in Africa and you have a main road out of the capital that goes to the middle of nowhere instead of going to the second largest city, right? And you look at that, you say, why the hell don't you just build this, this obvious? It's kind of build a road between the two major commerce centers. Well, if you're a dictator, the last thing you want is this big old paved road from where you're going to have a lot of insurgents potentially right into your bedroom if you're living in the capital. You want to make it as difficult as possible for the bad guys to get to you. So there are all these kind of twisted, perverse incentives that dictators have in order to stay in power. So just getting back to Xi Jinping, his main objective is to stay in power. And the way that you stay in power is to keep your people more or less happy enough, or enough people happy enough for long enough. So, whether it's a quiet backroom deal, whether it's pumping out more debt to keep some industries afloat at a certain point if this does get bad, whether it's making a backroom deal that nobody really acknowledges as a deal, and everybody can come out and declare victory. Frank, I think it'll be a while before it gets too bad. And in China, things aren't gonna, they have bigger fish to fry. They don't care that much about stupid Donald Trump and tariffs in the United States. The economy is still growing at 6-7%, and they have 812 million packages to deliver tomorrow, and it's not, in markets we talk about it all the time because we're looking at it, we're focused on it, but sometimes you got to take a step back and say, okay, for normal people, does this matter that much? No. And there are a lot of stock market investors in China, but they're not, if the market falls 20%, you're not going to have riots in the street because people are losing money. It's just not the way it works, because it's not that significant in the bigger scheme of things.
No, it's interesting. It's interesting to see how what dominates a news cycle here and what dominates a news cycle there. And I've learned that too firsthand going to Brazil for the Olympics, thinking that there was going to be body parts in the water and that I was going to get the crap beat out of me as soon as I got off the plane. And it was the most beautiful place ever. It was awesome. The people were great. It was amazing. I had but I was seriously just reading this stuff going into that. They're not prepared. It's nervous. You're going to get robbed. You're going to get killed. Be careful. None of that existed. It was amazing and I had an awesome time. But it's just funny how you just believe what you read sometimes. And I love that perspective. Now, there's a country that you recently visited that has you pretty excited, right? Every time you read your newsletter and I'm talking to you, you're someplace, right? It seems like you're traveling all the time. But this kind of surprised me when you said when you mentioned this country to me offline. What's the country and what has you so excited about it?
Well, I went to Turkey, and I hadn't been to Turkey in a while, and I went to Turkey because it's all over the headlines, and it was kind of the first domino of what may or may not become a bona fide emerging markets crisis, or just an emerging markets correction. And Turkey is, its currency is collapsed by 45% this year. Its current account situation is dire, and its stock market is down pretty sharply. So I wanted to go there to check it out. And I guess it's kind of similar to what I was just saying about China. I went to Istanbul, and everything's kind of normal, and it's a beautiful. I don't know if you have a chance to go there if you haven't been, Frank, but it's a fantastic city. It's incredible. It's just right at the crossroads of Asia and Europe, and it's just so full of history and the collision of all these cultures and religions and everything else. And I was there, and it was perfectly normal. And you read the front page of the FT, Turkey and the currency and crisis, but everything's kind of nothing's different from what you would expect it to be. Now, I think that the key thing, though, is that the currency has fallen 40%. So people who earn Turkish lira in real terms, their income has fallen quite sharply. And when I was there just a couple of weeks ago, that hadn't quite become the reality yet, because people they bring their paycheck home and they go out to dinner and they plan a vacation, and very very soon a lot of those people are going to say, "Holy smokes, I don't have the money to go because the cost of this vacation just went up by 30, 40, 50%." Or going out to eat suddenly became 20% more expensive, and I can't afford it, because in a devaluation situation, it's very unusual that your employer boosts your pay by the amount of depreciation, right? That just doesn't happen.
Mm-hmm.
Now, I think that there's another. The first shoe has fallen, and the second shoe is about to hit the floor in the next couple of months. Now, I've been through a number of financial crises. I was in Russia for two of them, and I've to get to work, I had to dodge these long lines outside of banks, because these banks were closing their doors, and you had hundreds of depositors wanting to get their money out, and you had long lines at the foreign exchange booth because people wanted to change their rubles for dollars because the ruble was falling through the floor. Now, you didn't see anything like that in Istanbul, I think partly because the media is very tightly controlled. And if the media was free to, go on TV and talk to people and say, "Holy smokes, look at this. What are you going to do? The currency's going down." And then they'd find some grandma who could say something inflammatory, then it would feed on itself, because that can become a self-fulfilling prophecy. If you see it and you see it on TV, you think, "Wait, I should be worried," and then it becomes this big thing. But if the media is very tightly controlled, people might notice it, but say, "But wait a second, I'm not really reading about that. Is this only me, or what's really going on here, or should I worry about it?" So there hasn't been any sort of big. It doesn't feel like there's any sort of crisis going on. I think that I went there to look at companies and possible investments. I think it's probably too early, just because there's a lot of stuff that's still, there's that second shoe, and the banking sector is kind of teetering on the edge, because they have enormous foreign currency debts that they have to meet, and now their local currency is worth a whole lot less in foreign currency terms. So there are a lot of doubts about the banking sector. A lot of corporates are going to be in big trouble. There's one stock that I think will be really interesting to look at some point, and it's pretty much the largest company in the country. It's a big industrial holding called Koç Holding, and it's at pretty much all-time lows. It's an ADR, KHOLY. And, it's a shorthand way of buying all of Turkey. It holds everything from food makers to automakers to construction to defense, you name it. And construction is going to be hit hard in Turkey. There's a big construction bubble and real estate bubble. But that's a stock that I think at some point will become pretty interesting.
No, it sounds like, and it's great, right? Because you're basically going to a place where you're preparing and you're doing your research. It's not that you just go there and immediately come back. You're like, "This is what you have to buy." It's not yet, but here's what I liked about it when things settle down. And just going through that research process is awesome. And which brings me to the next question. Is there any countries that maybe people are talking about as great investments, even maybe throughout Europe or wherever, that, you're skeptical on? And maybe talk about, since you travel to so many countries, and I'm sure you get these questions all the time, is there any place that you could travel to that's not safe? Because I always hear you read about saying most places are safe if you follow the rules. Is there any place that you really have to be careful that you'd be like, well, just I don't know if I would tell my subscribers to actually visit that country?
Yeah, I think I visited Venezuela 4 years ago, and it was not safe. It was one of those places that you actually do have to listen to people when they tell you it's not safe and to be careful. And when the guy driving you around says in a traffic jam, turn off your phone, close your computer, because you don't want the light from, kind of like the blue light to attract some guy in a motorcycle just driving down in the traffic jam who will tap on the window with a gun and take whatever you have. but yeah, Venezuela. I mean, and now it's everything I've read. It's just gotten horrible. It sounds incredibly dangerous. But no, most other places that I've been, and I've lived in 10 countries. I've traveled to maybe 80. So there are a ton of places I haven't been. But you just keep your wits about you, and you don't do anything dumb. Now, the risky thing is if you're in a big city and you don't know what the rules are, or you don't know where the bad neighborhood is, and suddenly you find yourself there. Especially if you don't look like you're from around there, that can be tricky. But no, I think I'd say Venezuela would be at the top of my list of places not to go.
And what about from an investment perspective, Kim, where a lot of people talk, because in the last 6-7 years, people tell me, Russia's great, you got to invest in Russia, and you follow advice, and I would have got crushed. But there's a lot of people just jump on different countries and say this is great here. Brazil, maybe a buying opportunity. Maybe is there any place that people are talking about that you're like, listen, guys, you still have to wait on this. It's still, not crazy, or even though valuations are maybe political, whatever it is.
Yeah, I think Russia, just because you mentioned Russia, and Russia is one of those places where you have to be. I lived in Russia for 9 years. I was a sell-side analyst and a hedge fund manager for a long time, and I still follow the market fairly closely. And it's one of those places that if you look at it from a snapshot, and you think of what the market is at a PE of whatever it is, 5 or 6, it's incredibly cheap. Look at that. And I can't tell you how many articles I've read or people I've spoken with who have said, "Yeah, look, I mean, that's an incredible long-term value." And I could have had the same conversation literally 15 years ago with the same takeaway. And let me tell you, 15 years in a market that's at a PE of 5 or 6, it's you look up value trap in Webster's, and that's what you'll see, a map of Russia. So I think the key there, that said, I have recommended a Russian stock to my subscribers, and right now there's a big overhang of potential additional sanctions, which would really hurt. But in the meantime, the price of oil has quietly been going up, and for Russia, that's enormous. That's incredibly important because so much of the economy still is highly geared to the price of oil, and so there's some oil producers that are very cheap, have a good dividend, and Lukoil is the second largest oil producer, and it has a liquid U.S. listed, or rather OTC ADR LUKOY. It's not going to double, but it will pay you a good dividend, around 5-6%. It's cheap, and it's going to keep on pumping out oil for a long time. And you compare that to, for example, Exxon. If you wanted to invest in an oil company and it's trading at about a third of the valuation, the dividend is higher, its reserves decline is a whole lot less, its production growth is minimal, but compared to an actual absolute decline for Exxon, if you're looking for some relatively low risk energy exposure, that also has the sort of Russia angle where, for what it's worth, Lukoil is in an interesting stock there.
Now, Kim, I want to finish with this because you have an amazing story on your site at Stansbury Church House, and you just wrote it this month, first week of September, where it says 9 ways to gauge the health of a country's economy. I love the article because you start out with demographics, which makes sense, things that are driving economic growth. You talk about inflation, debt, and domestic capital flows, state leaders, politics. And I'm like, okay, but you have 9 things there, and some of the other things which are really high on your list, number 2, number 3, billionaire lists, the cover story curse, and then you have the second city rule. And when I read that, I'm like, yeah, I love reading things that you don't see anyplace else. And I'm like, wait a minute, what is that about? And I read, I'm like, what? That makes a lot of sense. But there's so many people I think right now that are doing so well in the U.S. that they want to diversify and they want to get into other countries. And having this list, I think, was really cool. I actually, if it's okay, I'd like to probably republish this to my subscribers if they don't see it, but it's on the front page of your website. Again, it's for free, guys. I'm not selling anything here. But talk a little bit about some of those things, like billionaire list, cover story curse, even like the second city rule, which are very interesting, but make all the sense in the world before you invest in these countries.
Yeah, I think the billionaire list one is looking at the level of inequality, and if you have a lot of well, it actually looks at billionaire wealth as a percentage of GDP. And if you have a lot of wealth concentrated in a very small number of people, that is a long-term, that's in the long term going to be a problem for the country and for the economy in terms of the inefficiency of capital distribution, in terms of the potential for reinvestment, and also corruption, because often that's how do people get rich in a lot of emerging economies? It's through corruption. But yeah, it's an interesting one, especially when you look at countries like Russia, where you have that issue in China increasingly, and then you look at the U.S. And you look at the income inequality in the U.S. That's, I think, going to be a huge long-term challenge for the United States. And the cover story curse, it's kind of funny. It's kind of like I think it's a Sports Illustrated curse, that the team that Sports Illustrated says is going to win, whether it's the Super Bowl or whether it's the World Series, they're the ones that are going to completely crap out that year, or the star, the whoever they put on the cover. It's the quarterback of whatever.
With the Madden curse, they call it, the video game Madden curse, where whoever breaks their leg this season or gets hurt. Exactly. Yeah, it's so funny. Yeah, that's what I've been reading.
His ACL like the first week or whatever. And I think that for this, it's partly, once something is on the cover of the magazine, it's done. It's over. Everybody who would act on that has already acted on it. And the only direction the trend is going to go, where the price is going to go, is down, because everybody else has already acted on it. And that's, the classic one that actually is in this article is in this piece is a cover from The Economist. At the very bottom of the price of oil was like $10 a barrel or $7 a barrel. And The Economist said, "Oh, it's everybody's drowning in oil. Oil's going to, forget about oil." And then, of course, poof. A few years later, the price of oil was $144 a barrel, and yeah, you see that in so many other things. If you look at companies or CEOs who are just glorified, that's obviously doesn't work all the time, but a lot of the time you say, okay, something's going to happen now. Everything is priced into this guy. He can't do any better, or this company. It's just downhill from here. Yeah, the second city rule. It's a way of looking at the rural urban division. And you see that in Bangkok, it's a big thing, because there's been a kind of city urban rural division for a long time that's been incredibly divisive in the politics and held back growth in politics and policies. And actually, you also see it a lot in it's a different sort of thing in China, because you have what's been over time the biggest migration of people from rural areas to the cities, and that's created enormous problems for infrastructure, for building cities. And the number of enormous cities in China is just breathtaking, and that's partly been because of this huge rural migration to the city. And the point of this rule is that if you have a second city that's really quite small compared to the size of the capital, that reflects an underlying sort of division between, or the potential for an underlying conflict and division between rural and urban.
Yeah, I love it. It's just things that you could read that just makes sense. And again, there's 9. There's a list of 9. And guys, if that's okay, Kim, I'd love to send this to everybody and publish on Curzio Research for free. But just
fantastic.
Yeah, Ken, I mean, I love having you on because I always learn something new. You're a boots on the ground guy that's telling us what's going on with, like, going to Beijing and saying we're talking to brokerage firms and it hasn't come up once. And I guess that remind me of Brazil, because you only believe what you read. You only believe sometimes in the U.S. what you see and all this reporting and things like that. But when you really look underneath, it really gives you an opportunity, right? Because sometimes you'll see like the Chinese market come down 25% on news and you're going over the numbers and saying, well, it's not really that big of a deal. Doesn't mean a lot of these stocks can't come down more, but it's like you could use that as opportunity when you're really doing the homework, boots on the ground, and looking under the hood, and you provide that in an area, and I'm not kissing your butt here. I really mean this because I don't say this about everybody else internationally. I know you're gonna let me keep going here, but you provide something that in a market that not too many people are familiar with in the U.S. In different areas, and that's why for me it's really cool to have someone and a great source to talk to and say, hey, you know what? Here's where you want another real scoop of what's going on. This is the guy to talk to, and I really appreciate that. I know my subscribers appreciate it too.
Yeah, thanks, Frank. That's very kind of you. It's
well, listen,
it's a lot of fun.
Well, yeah, I know. 90 countries, incredible. But Kip, thanks so much for coming on. You're doing this from Singapore. I know every time I have you on, you're in a rotation now every 3 months or so, and every time it feels like you're in a different country. You're giving us information. You're telling us stock picks, and I really appreciate that and taking the time because I know your schedule is really, really hectic these days. So thanks so much for coming on, buddy.
No, thank you, Frank.
Hey guys, great stuff from Kim. I mean, I love him. He's not a fast talker like me. When I get excited about things, I'm like, yeah, I mean, he's just a guy that goes to different countries that just, I always learn something when I talk to him. And that's why I really appreciate guests like that. I mean, from someone who covers the market and covers so much and reads so much, right? This is what I do. This is what I love, right? This is what my subscribers pay me to do, to find ideas for them. I mean, Kim really is a great source. I mean, I'm always learning something new. He's always telling me things pretty much the opposite of what you're hearing out there because of places that he's been at. I just think about the meetings he said in Beijing with brokerage firms and trade tariffs came up 0 times, right? Pretty interesting. How it's not really being talked about in China like it is here, which I find fascinating. His stock pick's always original. The knowledge of politics outside of the U.S. or in different countries. And he's always traveling. So, every 3 months, he highlights the different country visits, the positives and negatives. Just really interesting stuff. And he finds ideas that, again, nobody else is talking about or you won't hear anywhere else. So that's why I love having him on a guest. Just, things like the 9 ways to gauge the health of a country's economy, just things like that help investors. I love to see stuff like that. So, again, when you look at those 9 things, by the way, that is published in a book that he highlights, The Rise and Fall of Nations, Forces of Change in the Post-Crisis World by Richard Sharma. He's the head of emerging markets for Global Bank and fund manager at Morgan Stanley. And that's, so he wrote it. And you just, the fact that Kim's able to find all these things and just, help his investors and make money in international markets and in an area that, hey, most haven't really done well, and he's done very, very well, is really, really cool. But again, I like Kim. I love interviewing him. I learn stuff. But this podcast is about you. Not about me. Let me know what you thought about that interview at frank@curzioresearch.com. Now, let's get to my educational segment. It is about China and tariffs. And I don't have to reiterate my stance again. Something I said, listen, don't worry about it, guys. Yeah, I provided examples. Even did like a Facebook Live video. I know a lot of people don't like Facebook now, and I get emails on that. We're going to start really posting these things on Twitter as well. I have Frank Curzio as my handle, so you can go, and I've been posting a lot more on Twitter, trying to do that 2-3 times a day, and just different things that I'm seeing throughout the day. I'm trying to post that you won't find anyplace else. So it's really cool. I'm not going to bore you with stuff and tell you what everyone else is going to basically talk about. But when you look at China and even the costs, I mean, the costs of the things and the prices that are raising that are going to be passed on to the customer, if you look at the benefits of what we're going to see or what we're seeing right now based on the tax cuts, it easily covers all tariffs very, very easily. And that's why you're not seeing earnings come down. You're not seeing sales come down. You're not really seeing a major impact in the U.S. markets while we're trading higher. But like, Kim said, sentiment-wise is very weak, even though numbers don't mean as much as people believe. But, the market's down 25%. There's a lot going on. But going forward, right, forget about the past, because people can say, well, I said this, I said that, and I was right, I was wrong. We want to talk about now and the future. I mean, is it a good time to buy some of these Chinese-related stocks? Even he said, he's like, yeah, probably. You don't know. You're not going to hit the bottom. And we've had one stock in there, which is JD. And, I've talked about that before, which we love, that I think it's just down because, the whole entire market was some negative news on the CEO, which I don't think it is an issue because they let him go back. I won't get into that. My subscribers know. But JD is in a portfolio. Again, I don't want to give too many stocks away, and I usually don't, but I wanted to talk about that to be fair, because I'm talking about this. I can see subscribers say, well, JD's down a little bit, and you're talking about, how right you are on the markets. It's just, look, I thought that would be a fantastic opportunity. We were up. I didn't think it'd get hit much more than the market, but be sure to follow your stops. But when it comes to the China market and what I'm looking at and trade wars, what we hear, it's such a fantastic term, trade wars, right? People are going to skate to death to buy whatever they're selling. But if China was really serious, the one thing that they would do is raise prices on rare earth metals. rare earths is, and they're not rare, right? It's a bunch of metals that are used for so many different things in the U.S., for technology products, for phones, for weapons, for missiles. It's something that we're in dire need of. That China controls roughly 80% of this market, and it's probably going to get higher. And they're rare. They're not rare, but they're very hard to produce and pull out of the ground. They're usually found in mud and found only in certain areas. And those areas happen to exist all over China. Now, if they decide to do this, you're going to see the prices of these rare earths skyrocket. They skyrocket because what do we have? We have an example, I believe it was in 2010. We did the same thing, cut off the market to Japan, and we saw prices for rare earths surge, right? They're very depressed now. It was a big market back then that was bigger than like the marijuana trend today, where you're seeing stocks go 40, 50%, go down 20%, then go up 60%. Similar situation. I mean, rare earths were huge. And Jeff Phillips, who's my buddy I've interviewed plenty of times, was the analyst at the time talking about these stocks. And he always jokes how I didn't know, I think it was Molly Corp, which I don't even know if it exists anymore, but that was one of the ones that he had in the pennies, I believe. And he's like, yeah, I think I sold it at 5 or 6. I didn't know it was going to go to, I went 13, 14, wherever it went. It went much, much higher. But, you know, it certainly came down. But he did very, very well during that time period and knows this market better than anybody. And when you look at this market, it's depressed, just like the mining market. I mean, super depressed. So for me, I see the risk very, very low trying to find. And there's not a lot of stocks out there, guys. I'd love to share stocks, but the ones that I would share you is so tiny that, you know, I don't want to push them higher or lower and I have to dig into them. But it's an industry that you need to dig into, because if China makes this decision, a lot of these little stocks, and we're talking about stocks back then that went from 15, 20 cents to $7, $10, talking about massive game-changing returns. They'll make your portfolio for the next 5 years. And you don't really see opportunities like this. Like maybe in gambling stocks we saw, you're seeing it crypto 2 years ago, and I still think that whole market's going to change over from ICOs to STOs and create another massive boom where you're actually getting the equity stake in cryptos and they pay dividends. I mean, the tokens are linked to nothing at all, other than using them on the site, which means, you know, not to get off point here with China, but with crypto, you know, if you don't use that token on that site, it's worthless. So the company could generate $50 billion next month and your token could go to zero because it's not tied to anything. There's no equity stake. It's not like a stock. When Microsoft does well and reports good numbers, your share is going to go up because it's equity. You own a piece of the company. It's not like you own nothing when you're buying ICOs, nothing. A lot of these are just utility tokens, and it's pretty crazy when you think about it. A lot of people don't know that. You think you're investing in something. It's almost like when Facebook purchased Oculus Rift and all those people, what was it? I forgot the place where people were able to invest in one of those sites and crowdfunding sites. And once they took it over, bought it for, what was it, $2 billion, I believe. Everyone was like, wow, that's great. No, you got nothing. Didn't own an equity stake. You didn't know that? You had the right to try their products out. That was it. People didn't know. They thought they were getting an equity stake, that they were going to be rich. It's the same thing with ICOs. That's going to change over the STOs. They want to get off point there. But this is a market and this is a sector that if China's for real and we piss them off enough, and it seems, and the only reason why I mention is because we saw the president of China hanging out with Putin, hanging out with Abe, hanging out with people he doesn't really like right now, and he's taking it to extreme levels that I didn't think would happen. I thought they'd be, you know, talking behind closed doors and, you know, these guys could take shots at each other's country. But behind closed doors, there's millions of things they could do for each other just to resolve all this stuff. Everything would be fine. But the fact they're not coming to the table means this could last even longer. So how do we play this going forward? That's one of the ways I think you play it. And in Curzio Venture Opportunities, you're going to see a recommendation, which is a stock that probably nobody's heard of because it's an international play. But you're going to have a great detail write-up in this newsletter that's coming out next week on Wednesday. But this is an area, guys, that you really need to dig into, start looking at, because the potential returns on this is kind of like the marijuana sector. I mean, you're looking at returns that could easily surge, not just 200-300%, but the last time this happened in 2010, I mean, prices rose tremendously. Some of these stocks went up thousands of percent. And based on a risk reward, if nothing happens or if we're wrong, I think a lot of the risk in the whole entire rare earth industry is priced into a lot of these names. But if I'm right, you can see massive, massive returns from a risk reward standpoint, I think it's fantastic. Get that new recommendation. But guys, start doing your research on this. There's a lot of tiny, small players in this market. I've been doing a lot of research over the past 3-4 months, and very excited about the issue coming out for Curzio Venture Opportunities. If you're interested in that, guys, I mean, we've been sending out offers and doing a lot of things for you. And just send me an email, frankcurzioresearch.com. Again, that's our high-priced newsletter. We also offer private placements. It's not for everybody. I understand there's a lot of people who just starting out investing and things like that. This is more, I wouldn't say for accredited investors, but we're taking on a lot more risk. We have a fantastic performance right now. We're doing very good because it's off to a little bit of a slow start at the beginning, which I addressed to everyone and said, listen, you're paying me. I got to do a better job. And I'm glad to see a lot of these stock recommendations really go higher. I think we have 4 positions now over up 100%. And this isn't me patting myself in the back. This is me extremely happy that my subscribers are making money because that's what you pay me to do. So if you're interested in that newsletter, let me know. For Curzio Venture Opportunity subscribers, you're going to get my newest pick. And this is a pick that I would actually say, which I never say often, has probably more upside than any of the stock that I've recommended in this newsletter thus far in the past 2 years. So I'm really excited about it. So, guys, that's it for me. If you have any questions, comments, feel free to email me anytime, frankcurzioresearch.com. That's frank@curzioresearch.com. Thank you so much for listening. I really appreciate it. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.